Alright, I'm recording for YouTube now, so that is good. So let me just quickly pull up the models real quick. I have them on my Discord channel. So, oops, I'm actually on that. Okay, so to remind you guys, let me just go here real quick. So to remind you guys, these are the models. I posted on Twitter multiple times. So this is the bearish model. Again, one, you look for the liquidity grab, like the equal lows, equal highs, then the market structure break 2, and then the retrace and the fair value gap. Same thing, bullish model. You guys know the deal. And then model 2, this is a little more difficult, but I find this a ton, and I actually found this on Friday. So this is the bullish model, and this is, so some people call this the inducement model, and if you guys see, last week we talked about just mostly this model. So this is the one where you look for liquidity grab, and then you look for the market structure break after going over liquidity, and then you look for the retracing the fair value gap. So this one, it's kind of the same thing, but what you're going to see is if we reject without hitting liquidity, like a major equal highs or major equal lows, or just like a London high of day, a high of day, just anything like that, a lot of times what that means is market makers are trying to get it to a lower price to get back in. So I mostly see with order blocks, which was Friday, and I do see with fair value gaps, like probably the same amount, maybe a little less, but I still see them a lot. So in this example, we get the market structure break at 2, we get the retracement at 3, and then another push at right here, but we don't have liquidity. So see how we don't hit the screen line? So what happens then is we fall below 3. So in the normal model, as you guys know, this is the market structure shift. But in this model, this is considered an inducement. And on my charts, I label IDM. So that's what I consider inducement. So this is a model that you're going to first want to master this, finding this. And this is pretty easy to master. But then after, you're going to want to master finding this. So what some people think is if we break this, they're going to short right here and then they're going to get wrecked. But you got to be cautious because in this model, we usually have not hit liquidity yet. So, and this example is with order blocks, and then this example is with a fair value gap, and the same goes for if it was a, this is a bearish model, but the same goes if it was a bullish model. So I'm just going to, so what I'm going to do is I'm kind of going to go over the alerts that I had in my channel. But first, before we do that, I'm just going to show you guys the inducement model, which is model 2, that I posted on Friday from the other channel. So let me look in Discord real quick. Like I said, this isn't going to take too long. I'm probably going to make this like a 30-minute thing and get off and go watch football after this and do some other work. But I just want to show you, like, the more you guys come to these classes and show these models that I alert my plays on, the better you're going to get the more screen time you're going to, and then you're going to start finding these in real time by yourself. So that's how I learned to find these models in real time by myself. That was just mainly seeing a bunch of examples that ICT mostly posted or other people posted on Twitter. So yeah, so this is Friday, and what did I say? So this is what I said. I said setting a short limit to short at 3848. Okay, so what time did I say that? I'm not sure if it tells me. I don't think it tells me. So I said that. Okay, I said that when we had these 2 red candles. So I said I was setting a short limit at 3848. So to visualize this a little better, let me get my handy dandy rectangle out. So I said it during these candles. We never had all this, okay? So just remember that. So I said right here, 3848, I was shorting. 3848 is right here. And you can see what happens. I had my limit, I had a 3-point stop, and as you can see, my max drawdown here was about 1.5 points. So we reached this 1.5 point range, and we actually kind of open a little higher, or no, we open the same point, then we wake up. but literally the max drawdown was like barely 2 points, and we come all the way down here at 3844. So that's already a 4-point move from my entry. And again, same thing. We come up here, we don't hit my 3-point stop loss, and then we even come down farther at 3843, which is 5 points from my entry. And in Discord, I said scaled some at 3845. So when I scaled was right here. And what you're gonna see is this is gonna be your second model, okay? Or this is gonna be your first model, okay? So if you guys notice, this is the obvious low right here. So we have the market structure shift, okay? And why did I like this play? Well, we had the market structure shift. We formed the fair value gap right here. So this is why I'm gonna limit there. And then if you draw the fib from recent swing high to the recent swing low, oops, I don't know why I have all this stuff on, but so if we draw the fib from recent swing high to recent swing low, you guys can see it's literally right on 3848. So what I do is sometimes I'll set it right here, sometimes I'll set a little above, but sometimes I only tap this. So that's the reason why I set a little above, because at this, because just in case we tapped and went down, because this seemed like a good play at the time. So I set my limit right where the 50% was, and I do expect us to go up in the premium. Remember, premium for shorts is above the 50% and discount is below. You want to short when it's above the 50% and you want to long when it's below. So I set my limit right there, okay? And why did I scale right here instead of waiting for liquidity to hit? And keep it in mind, I like this play because we had relatively equal lows down here. Do you see this? So we had relatively equal lows. Not perfect, but relatively equal. So that's why I like this. But this is what I saw. In the middle of my play, and why I said I'm scaling here is, one, I talk in this group chat with a bunch of really good traders, and my buddy said he's longing you down here, and he never told me why at the time, but when he said that, I was like, I wonder why he's longing right now. So that's when I went to I think I went to the 1 minute, and here's what you have to keep in mind. So although we do have equal lows down here, do you see how this already broke the previous low day? So shorts are already stopped here. So although these are relatively equal lows, you can kind of see this already took liquidity, okay? So you can kind of see this already went on the low day. If this wick was longer, and this wick was shorter right here, then these would be relatively equal lows because, well, they still are equal relatively lows, but they'd be a little better and a little more magnet because, one, we'd have a trend line with liquidity, and two, we'd have relatively equal lows of liquidity. And you can see if this wick was longer than this, then liquidity would never have been taken here. But if you see this, we took liquidity below low a day already because this wick went under right here. So here's where Model 2 comes to play. So I just showed you guys Model 2. Hopefully you guys remember. And that's when we get the market structure shift. So in Model 2, this is not a market structure shift. So that's what I thought at the time. And what I realized is this was actually inducement in the middle of my play. And I'm lucky I realized this in the middle of my play, or else I would have gotten wrecked. I mean, I still would have gotten stopped out at 3 points, but I probably would have never gotten a great fill. So you can see in the middle of my play, I realized it was inducement. Why? Because even on the 3 minute shows it, but I'm just going to go to the 1 minute because it shows it a little better. So on the 1 minute, look what we have. So we have the liquidity grab right here, okay? And in the model, that's the first thing you look for. You look for the liquidity grab. And the second thing you look for is the market structure shift. So we have liquidity grab. We retrace up here. We reject this fair value gap. This isn't where you want to short though, because I mean, yes, you could short here, but your target would be down here. But as you can see, you never hit the target. But we reject this fair value gap, and then look what happens. We retrace to about the 0.61 fib, and then here's when we break market structure. So the reason why I like this break is because, do you see how the build up right here, there's kind of a lot of choppy candles. when we break market structure here, you guys can tell that these two candles are super energetic. They're very, very energetic candles, okay? So you can tell that this is an energetic displacement. So this would be the market structure shift. And I didn't realize this at the time. Like, keep in mind, I did not realize this. And that's when I said I'm going to short right here, because I saw the breaker structure right here, because I thought this is a major low. And then I kind of looked and I'm like, wait a minute. After my friend said he's going long, I took a closer look and I'm like, I bet you this is inducement. And I'm going to go back and see what I said. So in the Discord alert thing, in that dodgy ICT, I said next profit is 3841, and I said that because I think it was an order block in the 5 minute. So just in case I like take profit order blocks, and I said I'm stopping out here, rest at break even. I don't like this. I think it's the IDM model. And that's when we went back up to my entry. So we went back up to my entry, and I said I'm going to stop out here because I don't like this. I think that's the IDM model. And I said, feel free to hold depending on risk management. Might be sell model. We hit equal lows at low day. And I got out for a little green with quad witching, so done here. Don't want to risk too much on the table. And going into this day, I said I didn't really want to trade, or I said I was going to be careful because it was quad witching. But you can see that this was exactly the IDM model before it even played out. And I said, yep, IDM is expected. Glad I noticed it while I was green. 3-point trade, not great, but at least not a huge loss. So you can kind of see, even though this is the sell model right here, you gotta realize if this market structure shift happens before this one, this market structure shift up here is gonna trump this one, okay? And hopefully you guys know what the word Trump means, but that basically means this is going to be prioritized rather than this one, because this is happening second. And if we go to the 3 minute, I think this is the order block. If you go to the 3 minute, yep. What did it bounce off of? So we had the inducement, which I label this as IDM, not a market structure shift. This is a market structure shift. This is IDM. This is inducement. We had inducement, and then look where we bounced. We bounced right off this order block. See this red candle before this up move? That's an order block. And like I said, I like to draw the line at the beginning. So there's your inducement right there. Let me take this away because this was actually for the short setup. So that was your inducement right there. And then, boom, smart money reload to the order block. And we go up and we hit this trend line liquidity. Okay, so we have this. We hit this trend line liquidity. And we have another even stronger market structure shift. So if someone didn't think this was strong enough for them right here, which some people might not think that, this was an even stronger market structure shift. And then look, we were tracing this fair value gap, and I think we hit just the 0.50. So even if you missed your entry and you didn't see this was the IDM model, this is kind of waiting for confirmation. So this is model 1. We go back to model 1 because you have your break a structure here, and then we retrace into this. We retrace right below the 50, and the reason why I'm drawing the fit from here and not here is because this is a pretty obvious low. So if you went on like the 1 minute, this would be a very obvious low. So we wicked right under your entry. Like I said, you know how I had my entry right at the 0.5 from earlier? In this situation, that would have been smart because it barely even went under it. So I mean, I know I would have gotten filled. But sometimes it's a risk you're gonna have to take. So sometimes if you have your thing too under, like maybe right here, you're not gonna get filled. So that's something you gotta be careful of. So we have the market structure shift here. This is again model 1, and then retracing the fair value gap, and then boom, this is the liquidity. This is high day liquidity. So high day is very important. How many times have you been trading with friends and your friends like, oh, I have my stop loss at high day, blah, blah, blah. So we actually see we wick up there. And here's another thing I want to show you guys. I'm going to draw the midnight open for you guys. So this is also something else ICT talks about, which I do a lot every day. So if you draw the midnight open, which is 0, 0 on the chart, it's going to be right, boom, right here. So it's a doji candle. So this is the midnight open. So why is this level important? Because of this. it kind of acts as liquidity level. So in the beginning of the day, look, we went over it and we dropped. We have a market structure shift right here. So this would be considered like a market structure shift. We technically took the liquidity at midnight. We drop, and then boom, what happens? Well, what does happen? On the 5-minute, we retrace into this tiny fair value gap, and it wasn't discount. And what else happens? We retrace into there. This is actually a cleaner 15-minute, but if I go on the 15-minute, it's gonna mess this up. So this is a 15-minute fair value gap. Was it our discount? Yes. Or I mean, was it our premium? Yes, it was a premium. It was above the 50%. And then look what else. See how clean this order block is? This green candle for this giant down move. Look how clean this is. So I had a bunch of buddies who shorted there as well. One shorted up here, a couple others shorted right there. We hit liquidity down here. And if we look over, there was no recent liquidity kind of down here, but this would have been my target because there's no like liquidity from before. So do you see how important this order block level is? Like, hopefully you guys start looking for these order blocks again. Order block bounce right here. When in the right condition, these order blocks are very, very strong. I definitely looked for them a lot, but this was a play you could have taken off open. And why was this good? Because we went over the midnight and then we went below the midnight. And another line ICT draws is the 8:30 open. So I'm just gonna go to the 8:30 open. So the 8:30 open was right here. See how we barely wick above the 8:30 open? That is very important. If you're shorting, you want to short in a fair value gap above the 8:30. If you're longing, you want to long into fair value gap under 8:30. So there's a million reasons to take this trade. It was a 15-minute fair value gap. Let me see if I can just draw it. So it's a little cleaner in the 15-minute. This is your fair value gap right here, barely wicks in there. So as you can see, that was a valid play. Let me go back to the 3-minute now. So midnight opening at 8:30. That's another line. Those are other lines you guys should be drawing. But yeah, there's like very, very solid plays on Friday, and a lot of times if you didn't get your entry, it often came right back up to this entry, like this order block that I just showed you. Came up to the entry twice. So I do not like taking fair value gaps twice, I will say. I do not like taking order blocks twice, I will say that. But if in the right situation, like this was a valid play to take twice. Why? Because the first wicket wicked up in the 15-minute fair value gap, and then the second wicket wicked into the order block. And if you have decent risk management, you could have went short with a stop above the order block, because that's a very, very, very tight stop. And you know, if it does go above the order block, it's not just going to go above the order block and rip back down, okay? It's not going to do that. It's going to go above the order block, and it's probably going to retrace, small retrace, and then rocket back up. So it would be good if you get stopped there. So let me go over one more model. I'm going to alert it in Discord. This is going to be the last one for the night. Like I said, I don't want to make this too long. I just wanted to review some of the plays that I did this week. So let me just go to my channel. Okay, so here's the other one I called out. Again, this is 2 models in one. So in this one, I said this: huge inducement plus OTE model played out. And I said expecting something like this. So why did I think we're going to go like that? So basically, let me go to the chart now. Give me one momento. So why did I think that was going to happen? Well, if we go to, I think it was on the 5-minute actually. Okay, right here. Okay, look at this for a second. Okay, so look at just this. So from here to here, see if you can see the inducement model. And you don't have to unmute your mic and tell me if you see it or not, but kind of look for yourself. Do you see the inducement model in this screenshot? Remember, inducement is a fake market structure shift. So hopefully you see it, but basically, here's your market structure shift. Okay. And after we get this market structure shift, I was going to short up here. So I was going to short in this very big gap. But you can see we never retraced to it. We just retraced to this one. And the reason why I don't like that short is because it wasn't in premium, and I like to short in premium. That's on my checklist. So we don't retrace there, and then we break market structure even more. Retrace in this very bad gap. Again, I didn't like the short because I think we were in premium, but we were kind of too low for my liking, and I wanted to retrace up there. So that's when I kind of got off the screen for a little bit. I went to my classes. I'm in college, so I went to a couple of my classes, and I saw this play out. So I got to the screen, and I was like right here when I got back, and I saw this, and without even drawing it, I knew this was the optimal trade entry. And what that means is it's a special set of fibs that ICT teaches. So if I draw my fib from swing high to swing low in like the bigger time frame, and turn on the optimal trade entry ones. So the optimal trade entry is 0.705, 0.62, and 0.79. And without even kind of knowing, I knew it hit the optimal trade entry like perfectly. So these are the fibs. If you want to copy them, you can, and add them to your checklist. They are important fibs that he teaches, and a lot of times what I do is I like to take the entry to 0.705. So what did I see? So when I got back, I saw it hit optimal trade entry and rejected, and I wasn't surprised because that was the fair value gap I wanted to short earlier after this market structure, and that's when I saw, oh, but when we did this, we broke this last swing high. And if you're looking for model 1, this would be a market structure shift, and where would we long? We would long in this fair value gap. So a lot of newer ICT traders, they probably long to this fair value gap, and if I was newer, I probably would have too, because I would have seen this inducement model playing out already. So when we got here, as you guys can see from my prediction, none of these candles were here yet. None of these candles here. It was just this red one. And I said we're going to go like this. And then I said we're going to go down and hit low of day right here. And that's literally exactly what we did. After that, I had no idea. But as you can see, we went a little down, retracing, and then more down again. But as you can see, my prediction was right. And why did I think it was right? Or why was that prediction so good? Well, if you guys look, whenever we get any sort of model, why is my Discord being weird? Okay, so my Discord just like lagged out or did something, I'm not sure. So why is this doing this? I might have to restart Discord, 1 second. Alright, I think that's fine right now. So whenever we get a model, what always has to happen? We always have to hit liquidity, okay? And in this, I saw we hadn't hit liquidity, and this was sell side liquidity. So I labeled this as sell side liquidity because it was low a day. A lot of people probably have their stops there. So I knew we had to hit this. And if you have a strong feeling we're going to hit a certain point of liquidity, that's when you look for the models. That's when you look for the break of structure. And even though we never really got a break of structure, a strong break of structure in this, I guess you can consider this one. I saw that we didn't hit liquidity, so if we did retrace, I was definitely going to enter knowing that we are going to hit liquidity. So that's exactly what I did. I actually entered twice. So my first entry, if we draw the fib, let me change it to the 50%. My first entry was right here above. It was probably like right here, 3923 to 3924, and I was very close to top ticking it, and I was already in profits. And then I moved my stop loss to break even, so I ended up getting stopped there. And I was like, I still think it's going down there. We still haven't hit liquidity for the inducement model. We still haven't hit sell side. By the way, liquidity and sell side is the same thing. This is liquidity. This is also sell side. It's just sell side liquidity. I just kind of use them interchangeably. But I saw that we still hadn't hit them, and I saw a wick up here. So I go, I really think we're going to hit them. And I plan my next entry to be the order block. Why? Because if you're entering right here at this order block, okay, your stop loss is always going to be above the order block. And look how tight your stop loss is going to be, because you know for a fact if we go above this order block, that is not good. That means we're probably going way up here. We're not just going to go above this order block and then go back down. and see how clean of an order block it is. This is a very small, tiny green candle compared to this giant red move. So I ended up re-entering right there with a stop loss right above there. That is a very, very good play. Why? Because there's really good risk reward. So we re-entered up there, knowing we still didn't hit liquidity for the inducement model. So I was entering a model 1 in the middle of a model 2 that still hit sell side, if that makes any sense. So I entered up there, and then I ended up selling at liquidity right here, just to be safe. That's when I sold all, actually. And why didn't I wait till down here? Well, I would have, but I kind of wanted to be done with the day for quad witching. There's not much of a reason. I was busy. I was coming from class, and I was going to play tennis. So I just sold this liquidity instead of waiting. And I checked back, and I saw that we hit this, but I didn't really care. I got a nice 3928 to... I got a 14-point move, which is just great. So I didn't really care. I was green for the day. I didn't want to get everything back. There would be a problem if I sold before hitting this liquidity. Like if I sold there, that would be a problem. That is very tiny, and if I know we're going way down there, why wouldn't I wait till down there? But at least I waited till this liquidity instead of just selling early. That is something else that you guys should probably work on. That some people that I used to have an issue with. I always used to sell a little early and not wait till we hit like liquidity. So a swing low, swing high, and there's like a 90% chance we're hitting the swing high and swing low if you think we're going down or up. So that's where your target should be. A lot of people just sell them at random points, but why would we bounce here at random point when there's no order block, there's no liquidity? Like we just don't bounce at random points. So that's why you gotta wait to sell a little more. So yeah, that was basically my other play, and I actually predicted that pretty well. So that is basically all I have for now. I don't want to make this too long. Like I said, it's been about 30 minutes. Does anyone have any questions? Unmute your mic if you do. Just ask me. I can answer any questions you guys have. And my Discord is being a little weird. I don't know what is up with it. It depends on the day. Some days I actually alert where I'm setting my limits. So I had a couple past days, and they've gone decent. I haven't taken any, like, I think I took, I was stopped out once for 3 points, which is basically nothing. But other than that, I had winning alerts, but again, they weren't like 50 million point alerts. So yeah, sometimes I do, and then other days I'll just post kind of what I'm seeing. So I'll be like watching this fair value gap, and that's when I really want you guys to kind of see that fair value gap and look for the stuff that I'm teaching you rather than me learning, because I might have different things on my checklist than what you might have in yours. So I might be looking for a zero TE, not zero, OTE entry, fair value gap, or premium entry, and you might not care if it goes in the premium or discount. You might just want to enter in a fair value gap. So I'm just kind of, some days I can just kind of show what I see, like a fair value gap that I'm watching, and that's when you want to go in the lower time frame, look for the sell model, blah blah. So yeah, that's basically how what I'm doing in my channel right now is. But yeah, sometimes I'll alert. It just depends on the day and if I see clean setups or not. Is there any other questions before I get off? Yeah, I will. I'm gonna try to explain, like, another video I want to kind of put out is looking at like the weekly time frame, not like the weekly time frame itself, but marking down Monday, Wednesday, Tuesday, Friday, or Monday, Tuesday, Wednesday, Thursday, Friday. So just for a short preview of that, let me take a horizontal line real quick. And this is kind of where time comes into play. Time is very important. It's more important than a lot of people think, but this is the 16th. Okay, so we opened up right here, okay? So this is Sunday night. Okay, so that's Sunday night. We have that. Why is this day The day looks longer for some reason. I don't know why, but I know it's right. This is the last thing I'm going to go over. I just want to point out something real quick. Okay, so 13th, 14th, 15th, 16th, so one more day. So 12. Okay, so here's what I want you guys to notice. So this is Monday, Tuesday, Wednesday, Thursday, Friday. So if you go back that center chart, a lot of times what you'll see is if you draw a line from each, a lot of the times if you're looking at the weekly time frame and you're bearish, a lot of times what happens is 70% of the time, I think it is, if you backtest, it should be about 70% of the time. The high will either be formed on Monday or Tuesday. And as you can see, even though this was CPI, the high was on Tuesday before the bearish week, okay? So I'm not going to, drawing these lines takes me a while, so I'm not going to go back and do it every single week. But you guys are going to notice that if the week is bearish and you're expecting a bearish week, the high will be formed on a Monday or Tuesday of the whole week, okay? So that's kind of something to take into account. And if you're bullish, the low of the week should take place Monday or Tuesday again. So same exact time as the high. So that's kind of another thing I'm going to go over on my YouTube, and I'll show you guys a few examples and how to play that. Other than that, I'll go over some other videos, just basic things that I've kind of picked out that I didn't really learn from ICT, but I kind of picked out myself. So also I do really like these equal highs right here. I'll definitely be watching for these probably. So yeah, any other questions? I'll give another minute. If no one has a question, I'll just end it. I gotta reset my Discord, so. Equal highs and equal lows I like to look for they're kind of like magnets, so I kind of like them for liquidity. So if we look at my model, every single setup I like liquidity being grabbed. So this is all hypothetical, but say we have equal highs like this. Here, if we went above these equal highs, yes, we could go above them, retrace, and then go way up here. But which would probably be more likely the case since this is a liquidity void right here. This isn't really a fair value gap, it's a liquidity void, and these usually get filled rather than we just go and reject them. But anyways, I like to use these as magnets, so if we get like a market structure shift, which it kind of looks like we already did, we got the market structure shift here, and then boom, retrace, retrace here, boom, boom, whatever. So these are really good targets because a lot of times these are where retail stop losses are. So this is liquidity. So this is where the market, this is the algo and time and price move to. So what I look for is, say we do hit this, I'll look for something like this. Oops. Maybe a high low formed. Something like this. And then boom, market structure break. And then retrace in the fair value gap. But again, if we don't get the market structure shift break after going over this, and we don't get a fair value gap, I won't short. But this is like one of those levels where you look for this exact setup that I've been showing you guys in Discord. So yeah, that's why I like equal highs and equal lows. And the more perfect they are, the better. As you can see, this is pretty much perfect. So that's pretty much perfect. And then you can see this is a little higher. So yeah, any other questions? Feel free to ask anything. Yeah, mostly on the 1 and 3 during the day, 1 especially. But if I'm trying to get a bias, I like to go in the 4 hour. So, like, when we got this market structure shift right here, I saw that in the 4 hour, and then I looked for the retrace in the fair value gap. And after this, I was pretty bullish after we bounced this and bounced. So, And I saw these equal highs right here, which we hit, and these equal highs right here. So generally, I like to use a 4 hour for my bias. I don't really take any swing positions, take them more. I'm mostly just a day trader, but so that's why I'm not looking for the 4 hour to take giant swing positions, because I'm not a billionaire who takes $300 million positions in SPY. But I'm sure they trade based off this time frame. But I just kind of use this time frame for my bias to help me trade on lower time frames. So yeah, that's what I mostly use this for. And then occasionally I'll check the 15-minute. But yeah, mostly the 1 and 3 kind of. But if I am looking for equal highs, equal lows, I'd like the 5 and 15. So yeah. All right. Yeah, I can make like a basic video going over just market structure if you want. Is that Chino said that? Okay. Yeah, I'll make a video on just market structure if you guys want. A lot of that can be forgotten sometimes. It's Dodgy's DD, so it's DODGYS DD, same as my Twitter. You can look it up now. Tell me if you find it. Yeah, just do that. So, any other questions? Well, my recommendation for you guys to do is go back a while, like more than a month on the 5-minute, and just try to pick these setups out. Again, I would go try to learn Model 1 first, and then kind of look for Model 2 a little bit once you start mastering Model 1. And if you are in my Discord, just kind of shoot me a chat, be like, at me and be like, yo, is this a setup? And I'll just let you know if it is or not. And yeah, the more you do that, the more you'll find these in lifetime. So, anything else? All right, well, okay, cool. Well, thanks you guys for coming. I'll try to do this like once a week, go over setups and plays I take. But yeah, other than that, have a great night. I'm going to go watch some football, and peace out.